Hey everyone, Couch Investor here with another video for you today. In today's video, we're going to talk about Spotify stock and why I think it has huge potential and a great place in anyone's portfolio. In my last video, I thanked you guys because we've reached 500 subscribers. I revealed my growth portfolio. And in that video, I said, well, if we're going to reach 1,000 subscribers, whenever that will be, I'm going to reveal to you my entire portfolio. So if you haven't subscribed yet, maybe now is the time to hit that subscribe button. And if you like the content you see, maybe hit an early thumbs up. So in today's video, like I said, we're going to talk about Spotify, the Joe Rogan deal, Spotify's numbers as a music streaming platform, why podcasting will and is becoming huge, and why Spotify is thinking into incorporating video podcasting and videos into their app. So without further ado, let's get started. And if you have bought Spotify before the deal or just after the deal, let me know down in the comments below and what you think about the future of this company. Okay, so first let's maybe talk a bit about Joe Rogan, what he does, who he is, etc. So he's an American comedian and a presenter for the UFC, but most of you, well, might know him from the GRE or the Joe Rogan Experience podcast on YouTube. Now, Joe Rogan has two YouTube channels, GRE Clips and Powerful GRE. Clips has 4.5 million subscribers and Powerful GRE has 8.5 million subscribers. His show reach over 190 million downloads a month, with ad revenue ranging between $18 and $50 per 1,000 views. So he and his teams might be earning about $3 million per month just on ads. Right, so now let's look at the big picture and why Spotify actually paid $100 million to acquire Joe Rogan's podcast. So let's look at the price of the stock before the deal was announced. The price of stock was around about $161. One day after the deal was announced, the price of the stock rose to $189. So that's around about 17.5 or so percent gain. But in other words, that's a $5 billion gain in market cap. That means Spotify made 50 times their investment in just over one day. They invested $100 million. In return, they got $5 billion worth of market cap. When they gained $5 billion in market cap, that means they took that market cap from their competitors. Is that a good deal? Probably it is. But at first, everybody thought, well, they paid $100 million for just a podcast. That's crazy. But when you look at the big picture, it was worth it. Now, why is it so important for Spotify to go and acquire podcasters? Now, podcasting is expecting to reach $1 billion of revenue, ad revenue, by 2021, as you can see right here. It's been growing year over year. So that's one of the main reasons. So what is Spotify doing actually to become let's say, a powerful player in the podcasting world? Well, first of all, they bought two podcast networks, one called Gimlet Media for $195 million and the other called Parcast for $55 million. And then they acquired the podcast creation company called Anchor for $154 million, which 70% of the shows on Spotify were created within that platform, with Anchor that is. Well, to continue that spending spree, they bought the show The Ringer. It's a sports and pop culture website and podcast network founded by sports writer Bill Simmons for $196 million. So I hope now you get the picture on why Spotify went for Joe Rogan. Well, Joe Rogan will bring people to his platform with the 190 million downloads per month. Even if 150 million people follow him on Spotify, that's huge gains for Spotify. Obviously, some of those viewers might already have Spotify downloaded or even paying for a premium account. Now, since the deal was made, Joe Rogan was the most searched terms in Spotify, so that's already a big plus for the platform, meaning people are already looking forward to listening to the podcast on the app. Now the show will remain free like it is on YouTube. So how is Spotify gaining from that? Well, the only thing you have to do is download the Spotify app. That's how Spotify will make money, running ads on free accounts or making money when you become a premium user like me. Now, the more they acquire podcasters or the more podcasts that will get created on Spotify, the more it will resemble the way Netflix does and runs its business. So let's say you try Netflix for free. You get, I think, a 30-day trial because you want to watch one specific TV show. Okay, let's say you start your free trial, you watch that TV show, suddenly a new show comes out, very popular show, you start watching that, suddenly your 30-day trial ends.
You fool! I have 70 alternative accounts!
What will some people do? Probably they will turn into premium users because they've suddenly discovered 3, 4, 5 new shows that they want to watch and they had no time watching it during their trial period. Same thing will happen with Spotify and the people that they will bring to their platform. Some people will remain free because Spotify is free to use. They're just going to run ads on that account. But if you don't want to see ads anymore, you will pay a small fee. I think it's $10 a month or so for individual users and $15 for a family account or so. And that's how they will retain people that downloaded the Spotify account because, well, they follow their favorite podcasters from YouTube or from let's say Apple Podcast or whatever. Now let's look at some of the numbers. The infographics will pop up right here. So 51% of the US population had listened to a podcast. 49% of those that are listening at home. 22% are listening in the car. 80% of those that are listening said that they are listening to most, if not all, the podcasts, and they are listening on an average of 7 shows a week. Which means people that are listening to podcasts are very into it. And also let's look at some more numbers. 31% year-over-year growth of premium users. Obviously there are ad-supported users. There's also growth there, but the metrics of measuring that is much lower than premium users. So I rather look at those numbers. Now, what media has been consumed since the outbreak has begun? We can see that there is a 30% increase in music streaming and only a 13% increase in podcasts. Now, good thing is that another graph appeared. 62% that said that they are listening to podcasts are more likely to continue listening to the podcast after the outbreak ends, and 74% said that they will keep on using music streaming platforms. Now, another important and big topic I want to talk about here is video podcasts. Spotify, as you all know, is a music streaming service, so there's just music, there's no video. Now, with Joe Rogan coming into play, they are incorporating video podcasts, so it's going to be like YouTube. You're going to see him, you're going to see the guest that he invited, and in a video you can listen to him, or you can also look at the video if you want to. Now, they already tried it before with Zayn and Health, if I'm not mistaken, but that was just a trial period. But in my opinion, they will start incorporating this more and more into more podcasts. Why is that? Well, with video, you can generate way more revenue than just audio. Same thing with YouTube. You can put an ad on instead of just you hearing people talking, you will actually visualize and see the ad in front of your eyes. And especially with podcasts, people are more likely to get maybe influenced by an ad, because when you listen to a podcast, you have to concentrate. When you listen to music, you just put it in the background and that's it. Now let's talk a bit about their competitors. In my opinion, the biggest one is obviously YouTube. Then you have Apple Podcasts, and maybe, in my opinion, Amazon slash Audible. All right, so let's first look at Apple. Apple Podcast is actually the biggest player right now in the podcasting world, but there's one problem. They don't really focus on that aspect of their business as of now. They don't create their own shows, and well, it's free and there are no ads, so basically no revenue for them. So I think each year Spotify will take more and more market cap unless Apple starts focusing on that, but I don't think their focus is on podcasts. I think it's more about their streaming platform as of now. Second is YouTube. YouTube will be the main competitor for Spotify, and obviously Spotify will be the main competitor for YouTube in the whole podcasting world. Now, especially because of the video broadcast, if they can make it work, that will be huge for Spotify, because well, now you might know YouTube is censoring and limiting lots of things you can actually say on YouTube, and Spotify, well, I think their rules are more lenient, that's the better word, than YouTube. Lots of people are angry with YouTube, saying, oh, they censor this, they censor that. So maybe those kind of people might want to switch to Spotify once they get that video podcasting working, etc. Now, my last one is Audible and Amazon. That's just my opinion. I think Spotify could be looking into, well, Audible books, maybe take a chunk of that market and put it in their app, because if they're an audio platform, right? So why not put books in that platform? That's an extra revenue stream for the app. People are already paying for Audible each month. Why not add that to the Spotify, let's say, family account, or whatever? You pay an extra dollar, so you get X amount of books. Who knows? On the other side, Amazon said that they might tap into the podcasting service. Actually, it's more into the sports content that was on top of their mind. They're looking to incorporate it with their audio programming, with the video rights to live sports, etc., which could be also something Spotify might look into I don't know, some Showtime shows, after sports, live coverage, or whatever. I don't know, but that's just my opinion. Maybe we should go and look at one of the graphs and see what the prices and what the price movement could be in the next couple of days. So let's just jump into the graph.
All right, so I've started making this graph actually a couple of days ago just to see how it will work out. So this is how the graph looks in the bigger picture. You can see the price go down, then back up, and here, well, the outbreak begins. It went as low as $109, and then this is where This is where the deal was announced. You can see hard spike to the upside. So I've put some lines here. So this is the major resistance at $195. Obviously that was reached in 2018, so back then, but that doesn't matter. That's just for me to see. Second one is $185. Is a, well, should have been a support, did not stand, so it's another resistance line. Then we have this brown one right here. This should be support at 169, and if that fails, we have one at 160 as well. So as you can see, the price after the deal went up to, like I said, the major resistance line, $196, $195. Since then, it has gone lower. Skip that 185 support one that I drew. Went lower until 176 or so 2 days ago. Now, from the top to the major support line, that's a 17.95% drop, just like the gains after the Joe Rogan deal. That might happen, but I don't think it will unless there's more bad news coming to the market in the next couple of days and the whole market goes down. So obviously this stock will go down as well. But I think this one right here is more realistic to around $170. That's just a 12% decrease. Overall, the uptrend line should be respected. The more we go sideways right here, if we go even a bit lower back to 177, let's say, but then go back up, down, we could see it respect the uptrend line in the long term and go back up. We could see a bull flag forming. Obviously, you know my view on technical analysis. You cannot really rely completely on that. It's just a way to maybe sort of try and look what the market has been doing in the past and maybe try to predict the future. So in my opinion, we're gonna stay in these areas right here for a couple of days, and then if there are some bad news, we could test 170. If not, go back above 185. Once we're above 185 right here, we have to make that our new base of support. If that is created, great, we could see it go back up, and when we are ready, we can maybe finally break out of that resistance line, but that could take some time as well. But overall, in my opinion, as you can see here, even when the buying started after the news, there are no gaps. That means there is legitimate people buying these stocks. But overall, I've put, if you saw my last video, I've put a target of $250 for next year. So if it goes back lower, fine by me. If it goes up and then creates a base of support, that's also great as well. Let me know down in the comments below what's your play for this stock in the short term and in the longer term.
All right, so again, if you have some cash on the side and you really want to take an entry position in the stock, maybe 180 or so is a fair price to enter right now, especially if the market will continue to rally. But if we will go into some, I don't know, trade war tensions or whatever, we could see the price go a bit lower to around 160, 170 mark. And that will be, I think, in my eyes, a very good position to open, especially for the longer term. That will be all, I think, for this video. If you liked it, please leave it a thumbs up. And if you haven't subscribed, maybe now is the time to hit that subscribe button. If you have any questions regarding Spotify stock or one of the others we talked about in previous videos, let me know down in the comments below. In my next video, I will cover another interesting stock for the long term, and that will be Pinterest. So if you're interested in that, stay tuned. It's going to be on Tuesday. So stay tuned for that video. Anyways, guys, take care, stay safe, and see you all in the next video. Bye bye.